It's Tamika Hunt with another episode of Mortgage Minutes. I'm a little bit behind on the time today. It's normally at noon. And to be honest with you, I did try pre recording. However, we had some technical issues and we weren't able to get the video uploaded. So I just took that as a sign to just go ahead and do the live video, even though we are a tad bit behind on the schedule. So this is August the 20th, 2026. It's a Thursday supposedly at noon, right? Yeah, it's 2 o'clock Central. Anyways, I'm Tamika Hunt, and I'm so excited for those of you who will join me. And we're going to talk about something really cool, but I do have an announcement. On next week, Thursday, I'm going to do a Zoom class all about VA home loan financing. So if you or someone you know is eligible for a VA home loan or just want to know more about how to get a VA home loan, please join us on Zoom next Thursday. That's the 27th, and it will be at noon. Only maybe 30 minutes, only maybe 30 minutes of your time. So please join us there. We're going to start with our verse of the day, just like always. Comes from the book of Psalms, chapter 113, verse 3. And it reads, Everywhere from east to west, praise the name of the Lord. Super sweet, super simple. All right, today's topic, y'all, is 10% down investment financing. So, on the Hunt team, we have a new product, of course, through our bank, CCM, Cross Country Mortgage. It's a 10% down product for investment home purchases. So, the criteria are as follows: you need a 740 credit score, you need to be a current homeowner, and you can buy an investment home with 10% down. The 10% does apply to single family residences. So if you want to apply for a multifamily investment loan, you're going to need 15% down with this new product. Now, whether you're doing the 10% down or the 15% down, you are still saving 10% on what a normal conforming loan would cost you for a traditional single family residence or a multifamily residence when it comes down to financing. So this is a product that our bank has formed just because they have such strength financially, and they're able to create products to help more people achieve their goals. So if you'd like to know more about that, reach out to me. It's going to help your families to create wealth a little bit faster. The immediate benefit may not be there unless they get a great deal on a property. So let me explain to you what I mean. If you're only putting 10% down on a property, your monthly payment compared to your rent could be pretty equal, right? You may not cash flow that property on a monthly basis. So you would want to have a long term goal, creating wealth by the property appreciating. And then there are times that you could apply more. So let's say your payment is $1,500 on your investment property, and your rent that you're receiving is also $1,500. Well, one of the things that's going to stay the same is your payment. It's going to be $1,500, but over time, you can increase your rent, right? So as you increase your rent, you can make extra payments towards your principal to bring that down. So just to make this really simple, if you have investors in your database, they are used to putting down 20% minimum on a property, unless they go out and do like a commercial balloon loan, right? But for a traditional residential loan, they're accustomed to putting down 20%, sometimes more, depending on their credit score. So you can take that same investor, help him or her or them acquire two properties with that same 20% down. Now, who just won then? They won. They won, but they won because they know you, and you won because you know me. All right, Sandy, thank you so much for being on today. I can't see who else is on, but I'm so appreciative. Let me know if y'all have any questions about the 10% down investor loan. Hey, I want to remind you guys about one more thing. So that's number two. Do not expect the interest rate to be 6%. Okay, friends? You're going to have a little bit higher interest rate. Not anything too crazy. It's going to be reasonable and it's going to be within compliance and all the laws everyone has to follow. But you're not going to have a super low interest rate when you're exposing the bank to more risk. Educating your clients is so important. Make sure they understand risk is a factor of what their interest rate is going to be. So the cleaner that client is, the more credit averse, less credit issues they have, the better their debt to income ratio, even the price of their home plays a part into what their interest rate may or may not be. That's going into a whole nother place. I don't even want to go there. But anyway, I hope y'all have had a great start to your school year. And I hope that you all are continuing to work towards your goals, even though we're in the middle of an interesting period in real estate, right? But it's really a great opportunity to sharpen your skills, build more relationships, become the subject matter expert, like hone in on all the things and do them twice as much to yield the same result. All right, that's it. That's all I got for y'all. Love y'all. See you next time.